Credit Suisse Research Institute, our bank's in-house think tank, studies long-term economic and corporate governance trends which have, or which promise to have, a global impact both within and beyond financial services. Gender diversity has been a topic of interest for the Institute for several years, notably due to its impact on corporate performance. Gender 3000, The Reward for Change, is the latest in our series of publications on gender diversity and reconfirms the clear link between diversity and improved corporate performance.
In Credit Suisse's initial research in the area of gender diversity, we focused on the relevance for investors of the representation of women in the boardroom, this having been a focus for many regulators and policymakers. While we're highly conscious of unduly asserting cause and effect, the analysis revealed a positive relationship with both corporate profitability and stock market performance from greater diversity. Specifically, we found that companies with at least one female member of the board of directors saw an excess compound return of 3.5% versus the MSCI Global Index, looking back over the last decade. These rising stock market returns have indeed coincided with rising female representation in the boardroom. Globally, we've seen this rise from under 10% in 2010 to close to 15% by the end of 2015. Whether due to the role of quotas or less direct intervention in Europe, the average representation of women in European boardrooms stood at nearly a quarter at the end of 2015, increasing from 14% at the start of the decade. In North America, diversity rates tend to be lower, but they themselves have increased by more than a third since 2010, both at the behest of shareholders, public bodies, and a growing and healthy debate on the more general topic of women's participation in the corporate world globally. At Credit Suisse, we have uniquely taken the analysis of the role of gender diversity beyond the boardroom and to the direct management of companies. Working with our analysts globally, we've actually built a unique database with close to 3,500 of the largest companies worldwide, which includes their 27,000 senior managers. The findings from the analysis added weight to our previous work, highlighting that companies with higher proportion of women in senior management have themselves generated a higher return on equity and stronger equity valuations compared to companies with a lower presence of women. For example, those that had at least 15% of women in senior management achieved a premium of 18% higher return on equity compared to those where women made up less than 10% of senior management. This high level of profitability also appeared to support premium performance for investors in stock market terms, in fact a premium that rose with increasing female representation. However, as positive a message that management diversity seems to convey for companies and shareholders, we did find what seemed significant challenges for women progressing to the most senior leadership positions in companies. While the average percentage of women in senior management stood at 14%, similar to the levels of diversity in the boardroom, we found a far greater concentration of women in shared services functions as opposed to senior operational roles, and in fact barely 4% occupied CEO positions. It would seem that much can still be done to change the shape of the management power line effectively, arguably to the benefit of companies and indeed also to shareholders.
For more information on the Credit Suisse Research Institute and our work, please visit our website at credit-suisse.com/research institute. Thank you.